It is great to have your company here on Business Now. Well, so far this reporting season, profit reporting season, we've seen results from the Commonwealth Bank and AGL, as we've explained today. Also, CSL, JB Hi-Fi, Car Sales, REA Group, Aurizon, Seven Group, Transurban and QBE. So they should all give us a pretty good view about how Australia's economy and stock market is faring right now. So let's bring in two of our favourite market commentators, Michael McCarthy from Moomoo, Adam Dawes from Shore & Partners. Gentlemen, many thanks for your time. Michael, I'll start with you. Surely, with all of those companies, that tells us what the economy is going through right now. But it looks okay, doesn't it?
Well, we're starting to get a good picture, Ross. We're a little over a quarter way through the reporting season. So we are starting to get a good grip. And we've had a good mix of businesses report too. And the overall impact is things are not as bad as we thought. We've got better activity. We've got clearly a better economy underlying these company results. Unfortunately, though, on the flip side, costs have risen more than expected. So the net result is a bit of a better performance on revenues, but a worse performance on profit.
And the litmus test, really, Adam, is going to be very much what happens in terms of the stock market. The stock market has not fallen apart from what happened early last week because of Japan.
Correct.
But broadly, it's been very, very strong. So therefore, you'd say big tick to the way the companies are performing right now.
Yeah, certainly. I think the companies are looking good, and previously it's been good. I think just the outlook does start to sort of wonder, and how those companies are actually going to see that outlook going forward. I think the market is giving it the benefit of the doubt to a lot of companies. Certainly, we are starting to see some of those companies, but JB Hi-Fi's numbers the other day, I thought the consumer was very fragile, but they just keep continuing to power on. So it is surprising us in some sectors.
OK, so then you sit there and you go to that very point. The consumer seems resilient because they still have jobs. So therefore, the companies have been able to raise their prices. The whole question about whether inflation is baked into our economy, you can see pay rises coming through. The Commonwealth Bank today talked about higher wages, higher IT costs. They've got to get that back from some means. They did over the past year, but of course that's the past year, not the current year we're in right now.
Absolutely, and it's crucial that the central banks around the globe continue to tread that very fine line, balancing the need to keep inflation under control without killing off growth in the economy. And while they manage that balancing act, things will likely be okay in the share market. However, if there's a slip in either direction, we could have real trouble.
But then on the other side, the surprises right now in this earnings season have been on the upside.
Yes.
If you have a look at some of those share price reactions that Ed talked about today, they've been colossal. I mean, we've seen some big rises. JB Hi-Fi is probably a classic, as you pointed out, but the Commonwealth Bank was strong today. AGL was strong today. You've had some really strong performances. So companies are probably, and chief executives are old masters at this, sort of promising on the down low, but giving a little bit better.
Yeah, and I think you look at like something like Commonwealth Bank, we were all expecting, it's priced to perfection. So, at the moment we were expecting the market to look quite negatively on some of those results. But the market just keeps continuing to buy these things. And I wonder if it's either passive index buying, so it has to be bought, or then there's traders out there that are really looking for these smaller amounts of profitability or smaller amounts, getting behind these things, and it's really working. Even Seven Group today had a good result, as well as then the stock got upgraded as well. So it's just interesting times.
All right, so just explain to me that we're supposed to be in the middle of a dip. Economic activity is almost at a low. We've got interest rates that have gone up. We've got wages that are rising. We've got inflation, and we've got a stock market at record levels. How does that happen?
Well, one of the things that's driving it in the short term, Ross, is that increase in dividends and returns to shareholders. It's pretty clear that plenty of investors locally want to follow Warren Buffett, and they want to increase the cash in their portfolio. And those who are enacting buybacks, or like JB Hi-Fi paying special dividends, or like AGL increasing their dividends significantly, are holding on to their shareholders because the shareholders anticipate getting that cash. So it's a bit of a good news, bad news scenario. If, however, that dynamic changes, Ross, the potential downside action here is very serious.
Because one of the big issues is that there's a lot of money chasing those very high valuations. You just mentioned it in index funds, and that's one of the issues I see. A lot of people these days just pile a lot of money into these index funds, into the managed investment schemes, the LICs. And as a result of that, that money just keeps on chasing more and more. They have to keep buying Commonwealth Bank. They have to keep buying all of these stocks. If something goes off, like the iron ore miners we're seeing right now, they come off in a big hurry.
Well, they do, but still those index buyers are still having to keep buying BHP, even though it's down or it's up. So it's a self-fulfilling prophecy, I think, in some degrees. I think over the other side of it is that when you're looking at these businesses and you're looking at these companies, you're looking for those ones that are coming into the ASX 200, or you're looking for those ones that are coming into the ASX 100. Then you get that natural uplift with the index buying as well. So planning a little bit, looking at how those index plays are working is good for investors in the long run.
OK, Michael, can this market withstand 1 or 2 interest rate rises if the Reserve Bank did go?
I think that'd be unlikely, Ross. I think that might be the spur that would see investors reconfigure their portfolios away from the share market into what they consider safer assets. 2 interest rate rises would be very tough, particularly with the Kiwis cutting this week, Ross. And if the US cuts as well, in relative terms, we're going to look quite unattractive to the rest of the world as well. And that means it's very hard to see a spur for significant gains for the local market, but there are plenty of risks that could knock us lower, and investors need to keep that in mind over the next 6 months.
OK, so if we're sitting here in 6 to 12 months' time, what do you sense is the mood that we're going to have at that time? Is this market now at its peak? Is it likely to come off a little, or is it likely to continue?
No, I'd like it to see it continue. Obviously, it's my job, so I'd like that to happen. But yeah, certainly something around that 8,000 mark, I think, at the end of this year, I think would be a really good success story for the ASX. I think that's absolutely fantastic. As well as then, looking at potentially where the next catalyst is going to be. Interest rates is probably going to be one of those things. Remember, when interest rates go up, that's fine, but it's the holding period between that and then obviously as they start to cut, the rhetoric changes. Is there going to be a recession? And that's the problem when that rhetoric starts to change.
Tell you what, Adam, Michael, many thanks for your time today. Really appreciate it. Great to have you on the program.
Thanks, Ross.